Over the last few days, I've seen a lot of traders asking the same question. Has the US dollar become bullish again? Why do they ask the same thing? Because over the last few days, pound has pulled back, euro dollar has pulled back, US dollar CAD has bounced. And many traders are wondering whether the entire weak dollar thesis is now invalid. The answer is not yet. In today's video, I'm going to explain why I'm still holding my position, why my micro analysis hasn't changed, and what I'm watching before I make the next trading decision. Hi traders, welcome back to the channel. If you are new here, my approach is different from most traders. I don't chase every candle. I combine macroeconomic fundamentals with technical analysis to position before the market moves. Today, I want to explain exactly why I'm still comfortable holding my current position even after this recent pullback. The macro story hasn't changed. Let's look back to where this entire move started with everything else. Now, it wasn't based on a random technical pattern, but it started with the economic data, with the non-farm payroll signals, and followed by the CPI signals and employment signals and the inflation signal. Now, first, we had a weaker than expected non-farm payroll right here with the US dollar, Canadian dollar, and we had a weaker US labor market right here, and then we received a weaker consumer price inflation right here, and then we had inflation pressure was cooling, of course, with that, and after that we received the PPI signal, and again inflation came softer than expected. The three major US economic releases all pointed towards the same conclusion: the US dollar should gradually lose strength. That's the foundation of my trades in all of these trades. If we could just look back and zoom in all of these trades. Now, look at the US dollar, the pound and the dollar, and we are closer to going back to the break even, but we are still holding because uh, the thesis still supports the upside. And let's go to another chart, which is the euro and the dollar, closer to our break even more than the pound is, because the thesis itself, it's still bullish to the upside. This is what I would like to see. But if it comes down to this, then I might be forced to look for buying opportunities again to the upside on this currency pair. And US dollar, Canadian dollar is closer to the second liquidity. The first liquidity was here. It's closer to a much more deeper liquidity around this level. If we retest this, a likely continuation to the downside to take out profit will be more favorable for this position right now. Why is the dollar pulling back now? So if the macro still hasn't changed, why has the dollar stopped falling to the downside? First, the market don't move in a straight line like this one. No. Institution also take profit before the expo to reduce the exposure before the major central bank meeting. Now, during July, liquidity is also generally thin because of this holiday season, and all of that creates corrections even when the bigger trend like the dollar weakness on this currency pair still hasn't changed. Whilst traders, I'm looking at this DXY. Now, looking at the dollar, when I analyze the dollar index itself, I don't actually see a strong bullish reversal from this momentum. I see what I see is consolidation, yes, but the dollar has stopped falling because despite the NFP here, despite the CPI here, despite the PPI coming in here, Nothing really has happened in July on the dollar index itself. This looks like a big consolidation on the DXY, but it also hasn't showed enough strength to convince that the brand new bullish trend has started. The three of the biggest micro uh, macro news are now are still intact, and this does not show that there is a strong bullish momentum that is coming in. Now, by three of the biggest macro events of this month, I mean the non-farm payroll, which led to this spike to the downside. I'm talking about the CPI, which led to the spike, and I'm talking about the PPI, which led to this spike. All pushed the dollar lower. Since then, we've mostly been moving sideways. You can see nothing has been happening, nothing truly has been happening, and this also is part of that. Now, traders, I'm done with the DXY. I want you guys to see one thing: gold. Gold is telling me a different story. Now, gold has started moving to the upside. Before, the currencies were moving with the narrative that the US dollar was going to be weaker and everything else was supporting that, yet gold was still sluggish. If you don't believe this, go to the previous videos. We had a lot of break evens from these signals because of the bias to the upside. Now, we entered here on gold expecting, because the micro was proving that everything else is still going to go to the upside. Now, gold is making fresh new highs. That's important. Gold often reflects long-term expectations around the US dollar and interest rates. If gold continues strengthening whilst the dollar only consolidates, that tells me the broader macro story may still be intact. Currencies are pulling back, but gold is still supporting a weaker dollar narrative. The difference between price and information, this is one of the biggest lessons I can give to traders. Most people focus only on price. Professional traders also focus on information. Ask yourself this question: has anything else changed fundamentally? No. Has inflation suddenly accelerated? No. Has employment numbers suddenly become strong again? No. Has the Fed Reserve suddenly announced a complete different policy direction? No. If the information hasn't changed, you shouldn't automatically assume your entire analysis is wrong simply because the market is correcting. Now, what could change my bias? Now, that doesn't mean I'm stubborn at all. If new information comes into the market, I will have to adapt. For an example, if we suddenly receive a stronger inflation, or if we suddenly receive a stronger employment data, a much more hawkish Federal Reserve, or the dollar index breaks into a stronger or more bullish uh, structure, then I'll have to reassess everything that I do have right now. Trading isn't about proving if you are right or proving to yourself that you are always right. It is about responding to new information. What am I watching next? So, over the coming days, I'm paying close attention to the US dollar index, the treasury yields, gold, the Federal Reserve, and next week's economic calendar. Those are the events that will determine whether this consolidation becomes a continuation of the dollar weakness, or whether the market starts building a completely different story. So, for now, I am definitely not chasing new trades. I am not panicking because of the short-term pullback. I'm simply allowing the micro thesis develop into what I want while managing risk, of course. Sometimes the hardest part of trading isn't finding the trade, it's having the discipline to stay in it. Now, traders, if you want to know or see how I combine microeconomic analysis with technical execution, join my VIP signal group right now, where inside you will get exact entries, exact stop loss and take profit, break even management, live trade update, daily forex analysis. You can also join my free Telegram group using the link in the description below. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on the notification. I'll see you in the next market update.